All right, we want to go ahead and talk to our BN reporter, Lynn Thomason. Here's why. She wrote a story on this topic. After losing big in 2008, many investors likely turned to professionals in 2009 to figure out what to do with their money. Well, as it turns out, if you listen to Wall Street analysts, not only would you have missed this year's stock rally, but you'd have lost money this year. So joining us now here to explain what happened, what analysts were recommending, is Bloomberg reporter Lynn Thomason. Welcome.
Hi, good to be here.
Okay, so what did the buy and sell rating system, how did it backfire?
Well, if you look at what analysts were saying in March, a lot of people were very concerned and scared in March, so they really sort of bunkered down into defensive sectors, healthcare, energy, utilities in Europe, sectors that have low volatility, look great on the balance sheet, and really no one wanted to pick these kind of stocks that have rallied so much in the last couple months, banks, retailer stocks that have really poor earnings.
Right. All right, Lynn, we're just getting started with our conversation. We do have to take a commercial break right now, so hold on and we'll continue our talk right after this short break. And welcome back. Joining us once again, Bloomberg reporter Lynn Thomason. Hi, Lynn. Thanks for waiting through the commercial break. So you're talking about, you wrote a story on how many of the Wall Street analysts kind of missed the rally back in March. They really didn't want to say bye to financials, retailers, some of the best performers we've seen since then. Right. And there was a Citigroup report out maybe at the beginning of last week that's saying they're still hesitant to say bye on some of these, these type of stocks, bank stocks, retailers, commodity producers, stocks that, look a little bit rocky, but were among the hardest hit last year. Does it have something fundamentally to do with how they go about rating these companies? And will they change because of what we've seen happen these last couple of months with this huge rally? Yeah, I think it does. I mean, if you look at, the job description of an analyst, what do they do every day? They're looking at the balance sheets, they're looking at the fundamentals, how are companies growing sales and earnings? And, really their job is to sort of pick the best of the bunch. You want to buy, a lot of people say buy quality companies, but the fact is that just quality companies didn't work in the last 5 months. So you were saying, you started to say that they're not really any more willing to put buy ratings on some of these sectors. Yeah, I think it would be tough. I mean, even now it's kind of hard to say, buy bank stocks. It's kind of seen as a risky move. We're going to talk to a technical analyst, Mark Arbiter, here in just a moment, who's going to point out exactly why this rally happened. He's going to point to the technicals. That's his specialty. So do you think these fundamentalists, these analysts, will bring some of the technicals now into their research? I think that's hard to say. I don't know. You'd have to ask one of them, whether they're willing to change what they do every day. I think, a lot of what they do is kind of dig deep into the balance sheets and look for the nitty-gritty. So it would be tough to see if they're going to look to technicals. Fair enough. All right. So where do we stand right now? What are some of the broader ratings on these industries? Well, I think it's a lot of, there have been some upgrades in the bank sector, some upgrades in the retail sector, but by and large, analysts are still tilted toward defensive sectors, energy companies, utilities, things that are generally considered safe. All right, very good. Lynn Thomason, Bloomberg News reporter. Thank you for coming on and talking about your story. You can read more about Lynn's story on the Bloomberg terminal today.